Everybody, thank you for coming. Tom Schweich, Missouri State Auditor, and what I'd like to do today is go over the results of the petition audit of the Springfield School District. I want to thank you all for coming. It's a good crowd. I've spent a lot of time in Springfield over the past 3 years since I got into the state public services. It's probably my 25th or 30th visit to the city. And I think it's really important that you all have this petition audit of the Springfield School District. Springfield is one of the most rapidly growing and prosperous cities in all of Missouri. I go all around the state. I visit all the counties, all the major cities, and there's no city I enjoy more coming to than Springfield. You've got great universities, you've got wonderful restaurants, tourist attractions, thriving businesses. This is really one of the up-and-coming cities in Missouri. It is a top-tier city, and I think you deserve top-tier public schools. So I think it's great that you asked for this audit. We were pleased to have spent so much time doing it. And I want to introduce some of the people who are here with me. We've got Regina Pruitt, Audit Director here, Pam Tillery, Audit Manager, and Roberta Bledsoe, who was the auditor in charge. These people did a tremendous job in putting one of the most complex and comprehensive audits together that I've seen since I've become Missouri State Auditor, and I think we should be very pleased at the quality of work that they did. Petition audits like this one, I do audits that are required by law and statute. I do audits that are within my discretion that I can just pick and choose, and then we do petition audits. And petition audits, to me, are the most important of all the audits because it's direct representative democracy. It's when a group of people decide that we want a review of what our public servants are doing. You go out, you get the work done, and you get the petition signed. In this particular case, there were 5,066 signatures needed by law in a city of this size. You need 5% of the citizens who voted in the most recent governor's election. That was 5,066. You received 5,202 signatures, and then that activates the duty of the state auditor to come do the petition audit. And I'm very pleased to do it. When we get a petition audit, we put it at the top of the list. I know I read some people saying, well, you have to pay for it when it's a petition audit, but there are 522 school districts in Missouri. And by doing a petition, that immediately puts you at the top of the list. So I think it was time and money well spent in light of the findings that we had, and I congratulate you for all the hard work that went into that petition audit, and I hope you're satisfied with all the hard work we put into it. It was a very good idea, and I think a well-needed audit, and it probably would not have happened for quite some time had it not been for the petition. So congratulations on the good work to all the petitioners. I will also add that we get different people who petition. Sometimes people are just angry or have an axe to grind or political situation, and sometimes the petition audits end up not really finding much of anything wrong. The comments I got from my staff was the petitioners in this case were highly professional, very educated in the ways of the school district, had legitimate concerns, and really were concerned about the welfare of the community. So again, congratulations to the petitioners on a job well done and getting the signatures. We audited the 2 years ending June 30th, 2011, but if something went forward into the present time, we looked at that too. We can't go back 10 or 20 years or we'd be here forever, so we try to focus on a couple of years, the most recent years, ending June 30, but there's some issues that went forward, so we looked a little bit more recently on some of those. We considered every concern brought to our attention, both by the petitioners, and we get anonymous tips and hotline calls. You might not see everything that you raised in this audit. If you don't see it in the audit, it's either that we did not find a significant problem or it was outside the scope of the audit in terms of the time period. But you'll see we have 51 recommendations, which is the largest of all the audits I've done since I've been here in terms of things to look at. So there are many, many things to be concerned about. This audit became active on July 9th, 2010. The field work was initiated on October 13th, 2010. The field work was completed on December 20th, 2011. The reason why it's been 3 months since we delivered is there's a process by which we give the results of the audit to the school for their comments, because we want everybody's input. And so there was a period of time where we worked with the school and the school board and the superintendent on the comments, got them all finalized, and then that resulted in our delivery today. Our office expended 4,112 hours on this audit. That's a major audit. That's a significant audit. And that doesn't even include the management time, which was 357 hours, or the director time, which was another 236 hours, or my time. I've reviewed this audit and edited it 5 or 6 times myself. That's just the field work. The cost will be about $180,000. That's what we'll be charging the district. And I can tell you, it's a lot of money, but based on what we're going to be talking about tonight, I think it was well worth it, and we found far more than $180,000 worth of things to be corrected, and I think it was a wise investment of time and money. Now, my audit findings are always designed to be constructive and not designed to create dissension and cause more problems. I hope everybody in this room will take these audit recommendations in the spirit that they're offered. It's designed to try to improve the school district, as I said earlier, not to settle political scores or someone to use for ammunition against the other person. What we want here is we want a top-level city like Springfield to have a top-level school district in terms of fiscal controls and financial accountability. And I hope people will read this audit in that light, that the purpose is to be constructive, and I hope everybody will be constructive with the results. The overall rating, when I started as auditor, one thing that had never been done in the history of Missouri was an actual rating. What we found was that, especially in a very long audit, there's some negative things said, there's some positive things, and people would take things out of context and sort of say, well, it was a really good audit while ignoring the bad things, or a really bad audit while ignoring the good things. So we decided we ought to be the entity that gives the rating. And we gave this a fair rating. There's 4 ratings. You can get excellent, good, fair, or poor. We gave this a fair rating, and the reason we gave it a fair rating is that we found a significant number of deficiencies that need to be corrected, but we did not find overt fraud, theft, embezzlement, the kind of things that would lead to a poor rating, where someone's actually stealing or something. And we have found them, by the way. In the last year, we found 14 cases of overt fraud and theft. So the good news is we did not find that in this school district. There's any of the deficiencies we found are simply problems with management and financial controls. And you've got a rapidly growing area, and these are expected, some of these things. I wouldn't be too hard on people for the fact we found a lot, but people need to raise the level of management and fiscal controls to the size and scope of the school district as it grows. So what I'm going to do now is I'm going to give a summary of what we found. I'll go over the findings, give you my thoughts on it. You can read more detail. It's a 60-something page report. I promise I won't read all 60-something pages to you, but I will give an overall summary of what we found, what the recommendations were, and what the reaction of the school district was to those recommendations. The first finding we had, and the reason we put it first was because of the dollars involved, was relative to the health plan. We found that the district had not adequately funded and monitored the operating costs of its self-funded health plan, so the fund is actually in poor financial condition. Now, I'll get to it in a minute, but there have been significant improvements made since this audit occurred, but let me talk to you about how it looked at the time of the audit. Our financial statement review showed that the liabilities of the health plan exceeded assets by about $3.3 million as of June 30th, 2011. And it looked to us as though the board might have to subsidize the health plan with other funds that are really supposed to be used for other things. That's actually legal. Reallocation of funds sometimes is against law and sometimes isn't. In this particular case, there would be nothing illegal about it, but it would be taking money and robbing Peter to pay Paul, taking money for something that it wasn't originally intended to. The claims have routinely exceeded premiums over the years, but premium increases were not implemented, and there were not cost reduction efforts until recently. There was also an addition of a dental and a wellness benefit, which is great. I mean, you want your teachers and your faculty to have good health, but it's got to be paid for. It can't go into debt, because that can ultimately cause a serious problem for the school district. We found that the board reviews and approves financial statements each month, but that they were not always accurate. In fact, when we had a review by the CFO of the district, we found the $3.3 million was not actually right. It was actually $4.5 million in excess liabilities rather than $3.3 million. Good news is, in late 2010, the board approved a plan that should improve the financial condition of the health plan. It should net at least $2.2 million in additional savings. Although that's not enough to cover the whole deficit, so we're hoping that there will be further changes implemented to make sure that this is a solvent medical plan. We also found the board needed to prepare written, comprehensive, long-range plans to ensure that these types of deficit situations don't occur again. Can everybody hear me? Is this everybody here? Okay. Our recommendation, it's obvious what it would be from this type of a finding, was that the board needs to closely monitor and take steps to improve the HBT financial condition. And the response was that the board has increased premiums, it's updating estimated liability for unpaid claims, which is important, and they plan to use an updated report to establish a minimum reserve balance. So that's good. We hope that this is carefully monitored as we go forward, and that this is now a financially solvent health plan. Second finding we had, finding number 2 in your audit report, is the district needs to make significant improvements in the handling of meal, student activity, athletic department, athletic event, and concession receipts and change funds, which are primarily cash. Anytime you've got cash, there's an opportunity for somebody to steal. Now, we didn't find any examples of people stealing, but what we did find were many opportunities for that, and we think those loopholes need to be closed. First of all, the segregation of duties is important. Duties of receiving, recording, and depositing monies from several district offices are not adequately segregated, and a documented supervisory review of counting records is not performed. So obviously, when somebody's taking in money, they shouldn't be the one depositing the money, or that gives an opportunity for someone to steal. And in some cases, that was not happening. We found that there was a problem with the security of monies. Monies are not always maintained in a secure location. District policy requires that money be put in a secure location so it can't be stolen. A few examples in the audit report. We found over $12,000 in cash and checks collected by the athletic office were kept on a desk shelf. It's obviously not an appropriate way to do it. At Kickapoo High, 2,676 in cash and checks were stored in a walk-in freezer. There was also $6,000 in cash and checks stored in unlocked desks and file cabinets in classrooms, which is against district policy. Again, no evidence of theft, but certainly would be easy to do it, and so we have recommendations in that regard. We also found that check and money orders were not always restrictively endorsed. If you receive a check, it should say for deposit only and to what account in there, but we found that had not occurred. This actually had been reported by the district's now gone internal auditor in 2007, 2008, and that problem persists to this day. There were several concerns regarding ticketing procedures. Receipt slips were not issued for all monies received, and pre-numbered tickets were not always issued to athletic event attendees as required by policy. Now, what happens in that situation is if somebody goes to an event, they pay the money, they get a ticket, then somebody takes the ticket, and then you can see how many tickets there are and say, okay, we sold that many tickets, here's how much money there should be. What we found in one case, for example, was they were not giving out tickets, they'd count the money at the end and then just tear off the number of tickets to equal the money. Well, that's completely inappropriate, and that, again, would create a condition whereby embezzlement could occur with no ability to track it, and that's problematic, and that's what we found, and we've asked that that be corrected. At January 2011, a cash count of the district's administrative athletic office identified 47 checks sitting there, over $11,000, some nearly 2 months old. Again, when money sits around, it creates an opportunity for mischief. At January 7, 2011, cash count of concession receipts at Glendale High School identified $3,552 just sitting there. Similarly, we found a situation where the concession manager used concession receipts to reimburse his wife for purchases made on her personal debit card, and that was problematic as well. Personal checks were sometimes cashed from district receipts, and that's also not appropriate under basic accounting rules, and these are similar to some of the things that were reported by the district auditor in 2007, 2008. Is there a way to get this to stay up? It keeps falling down here. Student activity funds. Accounting controls and procedures over district student activity funds need improvement. There's no district policy on how to handle student activity funds, funds that come in for students to be used. There should be transmittal forms. Checks for activity fees were often made out to teachers or sponsors. Sometimes they were left blank, which means anybody could endorse them to anybody. That was a problem also. Cash advances. We thought that the policies and procedures over cash advances could use improvement. The district provides cash advances for meal expenses to teachers, sponsors, and coaches when people are traveling, and that's perfectly acceptable. I mean, that's a normal practice. There's nothing wrong with providing a cash advance to students traveling. My kids, I've got a kid in middle school, you get a little money when they're on a field trip, that's understandable. But it's got to be very carefully documented so the situation is not abused. So, for example, one teacher was given $7,840 cash advance, and 1 month later had only submitted $2,200 in receipts a month later. Again, opportunity for mischief there. Eventually, all the receipts were turned in. Let me talk about the Tournament of Champions. I talked about how much I like Springfield. You have all sorts of interesting things going on, like the Tournament of Champions. Great event, but again, you need fiscal discipline and financial controls in doing such an event. And we found that there were not adequate procedures established by the Administrative Athletic Office for admissions to the Tournament of Champions. And you're talking about, in a 2-year period, over $300,000 worth of admissions. So this is big money. It needs to be adequately accounted. Again, this was a situation like the one I mentioned earlier, where the ticket numbering and the reconciliation with the money was not done adequately, and that creates an opportunity for mischief. Let's talk about change funds. Controls over district change funds we found need improvement. Each school office maintains various change funds for little things like parking and ID and law school property fees and vending machines and the like. And again, a change fund is a perfectly appropriate thing to have a little bit of cash on hand for changes expected in any school district. But we had some issues with there was no list of approved change funds. Most school districts say, here's the change funds we have and for what purpose. There needs to be a published list. And the authorized balance. At what point is there too much change and it has to be deposited in? So we asked that those be fixed. If you get to 2.9 in your audit, unpaid student and athletic event fees, we found that the district had not established adequate policies and procedures for unpaid student and athletic event fees, and collection efforts were not sufficient. There was even an odd situation, which I haven't seen before, where students were signing promissory notes to pay the fees. Well, under Missouri law, you have to be 18 to sign a promissory note. So I don't know if it was just an education and civic responsibility, but it had no legal effect, those promissory notes. Either the parents should sign them or there should be another way to do it. We also found that Kickapoo High allows students to charge ID badge fees and only collected 47% of those fees. So it's important when people charge fees that they all be collected. We also found that in one of the sporting events, we did a sample and found that 2 of the 8 schools participating had not paid the entry fee. And so again, they were allowed to participate, but they hadn't paid the entry fee. It's also important to have centralized cash collection points. As I mentioned before, you have to know where the money is going to go. Certain places are authorized to collect cash and other places are not, and we think that's a good idea as well. Our recommendations with respect to finding number 2 of the audit, based on what I said, are obvious. We feel the schools should segregate accounting duties to the extent possible, ensure supervisory reviews, and the school district indicated that they would review the process to determine how they can improve. That's kind of a vague answer. I'm hoping for something a little more specific, but at least there's an effort going on there. Maintain monies collected in a secure location, not in freezers and lockers and things like that. My understanding is the school district has already communicated this recommendation, and that's been implemented. We ask that the school district ensure adequate controls and procedures are in place to properly account for all monies received, and we understand that there are going to be monitoring and discipline of those people who do not follow those procedures. We expect all monies to be deposited in a timely manner, not have checks and cash lying around for months on end, discontinue cashing personal checks, reconcile concession inventories, and limit and document the transmittal of money between employees, and follow the district policies in those regards. Again, the district has assured us they will communicate those policies to the relevant people. Also, we expect records to be maintained by teachers who go on field trips and the like and turn in their receipts on time. Finding number 3 relates to bond and lease financing and long-term planning. Our conclusion was the district needs to improve its handling of bonds and lease financing and project long-term planning. Let's talk a little bit about the size and scope of the bonds and other financial instruments that are issued by the school district. This is now, of course, the largest school district in the state of Missouri, has huge operating costs. For example, the general obligation bonds issued in 2006 were $96.5 million. That's a big chunk of money for anybody. In 2009, there was another $50 million in general obligation bonds issued. And there were also lease participation certificates, which are basically a method of financing that does not require a vote. 2007, $3.9 million. 2009, $13.9 million. And these were for acquisition, construction, furnishing, and equipment of schools, particularly Hickory Hill School and a new administrative center. Let's talk about what we found with respect to all those financing mechanisms. First of all, if you look at section 3.1 of your audit, the district sold bonds and certificates through a negotiated sale instead of a competitive sale. Our office believes that competition almost always yields a lower price, and we always recommend competitive sales, and the normal practice we found around the state is for competitive sales rather than negotiated sales. In this particular case, the district has used the same underwriter since 1991. Now, even if a negotiated sale is acceptable, to have the same underwriter for 20 years without any sort of competition generally means the school district paid too much money. I can't prove that, but we see this all the time. We do audits all around the state, and we highly recommend there be some element of competition introduced into bond sales and the like. The underwriter also is the district's financial advisor, and that presents a conflict of interest, and we found that to be a problem as well. The Government Financial Officers Association cautions against using a bond underwriter as a financial advisor because it creates an inherent conflict of interest. Now, the response of the school board was, well, we're allowed to go outside. Well, that's true, but it doesn't alleviate the need to correct any conflicts of interest, which is what we found. The underwriter received $741,000 for bonds and $153,000 for certificates of participation. It's a lot of money, and when that kind of money is being handed out to an outsider, we think it's a good idea to have some competition and to make sure there are no conflicts of interest in that process going forward. Monitoring of bond projects. We found the district had failed to adequately monitor the 2006 bond project and actually overspent the bond proceeds by $1.84 million. That's a big overage, and that needs to be monitored more closely. We found that some proceeds from the 2009 bond issue had to be used to cover the cost of the 2006. It's not illegal, but it's not a good financial practice. Quarterly bond reports were not always complete, accurate, or timely. The Director of Finance said the June 30th, 2009 and September 30th, 2009 bond reports failed to include $11.4 million in additional projects. Those all should have been included. Change orders. Now, whenever you do a construction project, nothing is exactly the way it was supposed to be. You're never going to have a project which the contract has everything that has to be done. So we, as auditors, do not have any problem with change orders. So for example, if it turns out they misnumbered the number of lights they need and they've got to order 20 more lights, you issue a change order to the contract and you do that. But the normal policy is that if the change order is significant, involving thousands of dollars, you go back and you compete that out. You don't just give it sole source to the existing contractor because then they can charge pretty much whatever they want. We found, for example, with respect, I'll just give you one example. With the Cherokee Middle School, there were 70 change orders in that construction project totaling almost $1 million, and none of those were bid. We think that looking at what those change orders are and the fact that some of them were not integrally tied to the construction itself, such as audiovisual equipment or lighting and things like that, there's no reason not to send out a competitive bid proposal and get the best price for that, especially when you're talking about almost $1 million worth of school district funding. So that was a serious issue. Section 3.4 of your audit, it's a discussion of the prevailing wage. Missouri statutes require prevailing wage be paid to all workers employed by or on behalf of any public body who performs construction work projects other than routine maintenance activities. We found that not all of the contractors had sufficiently detailed payroll data, and the district did not review the data that was received, and in some cases prevailing wage was not paid. So for example, there was a subcontractor at Campbell Elementary that was supposed to be paid under prevailing wage laws of $23.41 an hour, and they were being paid $16 an hour. Now, I'm all in favor of getting low prices, don't get me wrong. You know, I'm very conservative on finances, and you should get the lowest price, but you got to follow the law. In this case, it's a legal requirement to pay that. So there's no wiggle room to pay a lower rate. You have to do that, and that was not done in this particular case. We found another case where plumbers were being paid about $20 an hour when they were supposed to be paid $25 an hour. Again, this is a statutory violation. There's no leeway not to correct that. That has to be corrected. If you turn to section 3.5 of your audit, long-range planning for projects and facilities, the district real estate buildings are valued at $216 million. That's a lot of property the school district has. And during the last 2 years, the district has spent almost $30 million for renovations, construction, property leases, and purchases. When you're talking about that kind of money, there needs to be very careful and formal documentation of what you're doing and why. We found that the district had not formally documented its decision-making and planning processes with respect to several of those facilities. And again, you as the citizens are entitled to know why they chose to invest money in particular areas, and we simply request that the district bring their decision-making process and transparency up to normal levels. We also found the district lacks written comprehensive long-range plans for new construction, renovation, and space management. You can't do this by the seat of the pants when you've got a school district this big. It's got to be done with detailed planning, and I think that everybody's committed to doing that going forward. So based on that, our recommendation in this particular area is that the district needs to pursue open competition for bond certificate sales and discontinue using the underwriter in a dual capacity as a financial advisor. In other words, competition and lack of conflict of interest. That's two things I look for always. I always think competition and avoiding conflict of interest lead to higher quality service at a lower cost, and that's what we're recommending in this particular case. I did not quite get the answer I wanted from the school district on that. Basically, they said there's no universally accepted rule on that, and they'll look into it. I was a little disappointed in that answer, I'll tell you, and we will be back in 90 days to look and see if that recommendation has been implemented. We recommended that the district adequately monitor future projects and ensure quarterly bond reports are timely and accurate, so we get accurate information on how much money is being spent, and so you don't have the overruns on the bond issue that occurred in the past. We think that the district now has actually made changes to the bond monitoring process. If those changes that they told us they were going to make are implemented, we feel you will have a good system in place to make sure that bond proceeds are not overspent. We recommend there's a timely approval of change orders and bidding of major change orders. You might as well get the lowest price when there's a significant or large change order. We recommend that you establish policies and procedures to ensure prevailing wages are paid. That's a legal requirement. That's the law. That has to be done. I was kind of surprised at the response of the district. And by the way, many of the responses of the district were very good. Some of them I was a little concerned about. The response we got was that the district would review current policies and determine whether increasing operating expenses by adding staff to review payroll information is merited. This is not optional. You have to pay prevailing wages. So something has to be put in place to make sure that these deficiencies don't occur in the future. And we'll be taking a look at that when we come back in a couple of months. And we also recommended just that there be long-term comprehensive written plans for expenditures of large amounts of money on capital improvements and the like. And I think that that's going to occur, and that will give you all more transparency into what's going on in the district. Finding number 4, I think, of all the things we have in there, the one that's, from reading the media around here, that's generated the most controversy relates to some recent real estate transactions. So I wanted to talk a little bit about those. The district entered into multiple agreements to sell district property to a buyer who basically failed to make the required payments, failed to meet many of the contractual requirements. But what the district did, instead of finding somebody else, they constantly amended and redid. And at some point, it gets to be a little bit out of hand, and that's kind of what we found. I think you all know what I'm talking about, but I'll go through it anyway for the benefit of those who haven't. We're talking about the sale of the old Hickory Hills School property. In April 2006, Hickory Hills Middle School property was appraised at $3.2 million with a projected appraisal value of $5.35 million by April of 2010. In 2006, the property was properly advertised for sale. That's the way you do these things. A sale was actually negotiated in October of 2006, but it fell through in March of 2009. And this happens. I mean, not all sales go through. I mean, frequently real estate transactions, if you ever have tried to sell your home, how many times does it fall through? It falls through. That happens. That's not a problem. In September 2009, Lorino, am I pronouncing that right? Yeah. Lorino Properties attorney contacted the district attorney about buying the property. All appropriate. In February 2010, the board authorized the sale of Lorino, and here's where the problem started. Without reappraising the property, without re-advertising the property, and without soliciting bids from other buyers. So that's the first problem we found with this overall transaction. On March 1, 2010, the district entered into a real estate purchase agreement for $4,450,000. The requirement was for a mere $10,000 in earnest money on a $4.5 million purchase, into an escrow account with the entire balance due at closing, which at that time was expected to be November, just a few months later. In this case, the sale was never finalized. No closing or earnest payment money ever occurred. Instead, on December 9, 2010, now this is several weeks after everything was supposed to be paid, there was an amended and restated real estate purchase agreement executed. Again, no competition, no appraisal. It required a $10,000 earnest money payment, again, only $10,000 into a district escrow account, with the buyer taking possession at closing on January 31st, 2011. There was a temporary promissory note issued for $4.440 million to be paid on or before June 15th, 2011. So this is the second time they were supposed to pay. And the way it was supposed to work was about $2.5 million was to be a cash payment, and the district was going to finance almost another $2 million of that purchase price. There are legal issues with the ability of the school district to finance for a private buyer instead of going to a bank or whatever. It's questionable whether that's actually even legal. We've negotiated and talked to the district about it. We conclude there's enough ambiguity in the law that doing a financing deal like that is not illegal, but as you'll see, it didn't prove to be very financially prudent. In this particular case, $1 million of principal payment was due December 31st, 2015, and the $950,000 would be payable on 2017 under this financing arrangement that the school district did. And that's independent of the $2.5 that was supposed to be paid up front in cash. Quarterly interest payments were based on a simple interest rate of 3%, but they do not even commence until the $2.45 million up front is paid. Okay, so that was a rather strange and complex financing arrangement with somebody who hadn't proven an ability to meet earlier financial requirements. Again, we're not going to second guess everything the school district does, but it's an odd and unusual transaction, and we have not seen that in any other school district we've audited. The buyer was required to demolish the building and lower the grade of property, even if the agreement was rescinded, so the school district did get some consideration if the agreement fell through. And if demolition was not done by June 15th, 2011, had to remediate asbestos. So that was sort of what was going to happen if it didn't work out. The buyer paid the earnest money, which was just a few $1,000s, but did not make the $2,490,000 payment. So this is the second time a big payment did not go through. The buyer requested an extension, and the board approved a first amendment to this second agreement in closed session on June 28th, 2011, and the amendment became effective retroactively as of June 15th. This required a $50,000 non-refundable cash payment to be credited against the $2.5 million that was supposed to have already been paid in full twice. The buyer did make the $50,000 payment, but failed to pay the rest of the cash payment and then requested yet another extension. The second amendment to the agreement, which is actually, I think now we're at the fourth time this agreement didn't go through, was effective October 14, 2011. It required the buyer to make monthly non-refundable payments of $12,500 per month to be credited toward the almost $2.5 million balance, now due April 13, 2012. Bottom line in all this that I just said, let me just cut to the chase here. The district has received $122,000 of the $4.45 million as of the end of last year. I think there have been a couple of payments since, but you're talking about only a tiny percentage of the purchase price paid over a 2-year period. $10,000 in earnest money, $50,000 payment on 2011, and as of the end of last year, $62,500 in the form of 5 $12,500 payments under the second amended agreement. The district currently holds a subordinate promissory note for almost $2 million, $1 million due by December 31st, 2015, the rest December 31st, 2017, but basically it's like an interest-free loan because none of that is due until the 2.45 is paid, which hasn't been paid yet, so it's just kind of pushing it further down the road. We also found the buyer has not obtained the demolition permit that was required. There has been at least a bidding of the asbestos work, but that has not been done either, and the buyer is working with the city, county, and state to work to try to get the requirements. Not really a very clean transaction, to say the least. Let's talk about a couple of other real estate purchases. The district failed to document the reason for paying $258,000 more than the appraised value for some land to build the new Hickory Hills School. That was a problem. It's okay. Sometimes, real estate appraisals aren't accurate. Sometimes you can't pay the full amount, but there needs to be documentation as to why. If there's an appraisal and you don't pay the full amount, there needs to be documentation as to why. And the reason this happens is we have seen instances, and that did not occur here, where somebody got a sweetheart deal because somebody had a friend or whatever. Now, we don't have any indication of that, but the point is when you do purchase or sell real estate at different than the appraised value, you need to have a clear documentation as to why that occurred. That's all we're asking for. We're not saying you had to get the appraised value. District purchased a property in October 2009 for the new Craft Administrative Center, but did not obtain a current appraisal. They had used an appraisal from March 2007. Again, appraisals not only need to occur, but they need to be updated and current. Our recommendations under Section 4 of the audit are obvious in light of what I just said. Again, reevaluate current arrangements and options, assure compliance with agreements, and consider not entering into these sort of strange financing agreements like you had for Hickory Hills in the future. I know this has received a lot of bad press, quite frankly, I think rightfully so, having seen a lot of these transactions. It's not a good situation, and I'm just hopeful that eventually this amount will be paid and you'll be able to move forward. The auditee's response was they will evaluate whether obtaining current appraisals for future real estate sales would increase the effective use of resources. That's not an acceptable answer. You need a current appraisal. And we hope that that will occur. We also recommend they ensure real estate purchases are handled appropriately, all documentation retained, and document the reason for disparity between appraised values and sales price. And we understand that that will be implemented in the future. If you turn to Section 5 of your audit, I'm just going to keep rolling if that's okay with all of you. Procurement practices. We found that the district frequently obtained professional services without competitive selection processes, and bidding decisions were not well documented. Professional services. The district has used the same attorney for 25 years without periodically conducting a selection process and does not have a written agreement. Now, let's talk about the law, and then let's talk about good accounting practices. Under Missouri Statute 432.070, political subdivision contracts have to be in writing. So one thing that has to occur is if there's an agreement with council, it has to be in writing. Otherwise, they can bill you whatever they want, they can send anything whatever they want, and there's no way for the district to hold the attorney accountable. With respect to competitively bidding professional services contracts like lawyers, that is not legally required under Missouri law. It is for other types of contracts, but not for legal contracts. But it's still a good practice. You know, I was a lawyer in private practice for over 20 years before I had the honor of being elected as your state auditor. And I had certain clients that I won every single case for. I mean, I won every one. Now, you think they just give me the next case? No. I had to compete for every single case I wanted because they wanted to make sure they didn't just get good service, they got good service at the lowest price. So the idea that, well, we have long-term relationships, which is what the response of the district was, and we want to keep those relationships, that's an interesting idea. It's kind of quaint. It's out of the 1980s. In these days, you compete for everything. I competed for everything. You compete for every case, and that's the way to get the best value. We found that the district used the same health benefit trust fund consulting services since 2003 without periodically conducting a selection process, and has not actually even renewed the contract until 2005, so there was missing contract documentation. The consultant currently performs duties not in compliance with the contract terms. You can read about that as well. So you have to have compliance with the law in terms of written contracts. You have to make sure that there's adequate competition, and then once you have a vendor in place, you have to make sure they're actually acting in accordance with the terms of that written contract. And we found issues you can read more detail about in the audit with all three of those issues. We also found that the district had not solicited any proposals for transportation consulting services recently. Talk a little bit about engineering and surveying services. We found that the district had not followed its procedures for evaluating and selecting an engineering firm at Jarrett Middle School. They took a contractor that was not on the approved list of contractors. We found that the district did not follow its procedures for evaluating and selecting a geologic engineering firm for the new Hickory Hills project. The contractor on an approved list did not bid. The district did not document its evaluation and selection of surveying services either. These are all important services. And again, we're not going to second guess who the district chose. We just want it to be documented so you all can understand what went into that process. Contract procurement and vendor donations. We found that the district had awarded a custodial management services contract to a bidder who had basically offered to make $125,000 in donations back to the district over 5 years. Now, that sounds like a kickback. It isn't technically a kickback because it doesn't benefit anybody individually, but the problem is the bid did not require bidders to address donations. So they kind of snuck in by saying, by the way, we're going to give you back $125,000. If that's something that weighs into the decision as to whether you're chosen, it should be in the bid requirements. People should know that a return is allowed. We found that only one time since I've been auditor, and one other, it wasn't actually a school district, it was a university that did that. And we found that not to be kind of a shady practice, and we recommended that it not occur, and that particular university is going to discontinue that practice. We found also that the district awarded the local vendor exclusive rights to provide beverages based on a $212,000 donation back to the school district. Again, the bid advised bidders to identify donations in this case, which was good, but didn't specify how that would affect the evaluation. And we think that we need to be very specific when you're soliciting those types of donations. Solicitation should clearly identify evaluation criteria and all items bidders need to address in their proposals. It's just basic contracting. Let's talk a little bit about bid specifications and evaluations. We found that the bid specifications sometimes limit potential bidders, and there were some concerns about the development and evaluation of requests for proposal. Let me talk about a couple of examples of what I mean there. The former transportation director developed specifications for digital video systems for school buses, and then also recommended which vendor should receive the request for proposal. In federal law, that's called an organizational conflict of interest. If you are a person who's hired to help develop the criteria for selection, you're not then allowed to bid on the contract and get it because you have the inside track. And that's what happened here. Again, if this were a federal contract, it would be a violation of law. It's not a violation of law under state contract. There's no illegal activity that occurred, but it's just not a good practice because you can sort of tailor. If you know you can bid on something you're developing the request for proposal for, there's always the chance you can tailor that proposal, request for proposal, to your own capabilities. And that we see that happen all the time, and that's why it's considered inappropriate. In this particular case, the specification required military-grade standards for digital video systems for school buses. Well, there was only one company that could do that, and that was the transportation director's former employer. So I can't say that it was inside dealing, but I can say it looks pretty bad, and the reason why you don't allow someone developing a specification to either bid on a contract or advise somebody bidding on a contract or have some sort of conflict of interest is to prevent this sort of appearance of impropriety. And we have a couple of other examples of that in the report that you can read about, where it looked to us that the person developing the specification arguably tailored it toward a particular vendor, and that's not appropriate. RFP for new school buses, for example, said that additives could not be used to meet emission requirements, although this is a very common practice. Only one of the vendors could meet this requirement. And again, that was somebody that had some sort of relationship here. So that's something we want to make sure is addressed. I'm not saying anything inappropriate happened. I'm saying it looks like it, and that can be bad enough because it undermines the confidence of the people in the integrity of the procurement process at the school. Recommendations: solicit proposals for professional services, enter into written agreements, that's state law, renew contracts to extend the terms, and ensure compliance with contract terms. We have received assurances from the district they will enter into written contracts. They have insisted, though, they do not want to bid out professional services. We think that is a mistake. Number 5.2, comply with state law and district policy when procuring engineering and services and document the selection process. Ensure requests for proposals clearly identify all the criteria that are going to be used, so somebody can't say, well, we're going to give a donation when it's not in the RFP, or say how much weight that is going to be given. Ensure bid specifications are not unnecessarily stringent, and closely examine district transactions to make sure there are no actual conflicts of interest or an appearance of a conflict of interest, and we hope that those will be implemented. Number 6, contracts. If you go to section number 6 of your audit, we'll talk about contracts. We felt that the district needed to improve its handling of contracts. I talked earlier about the selection of contractors. Now we're talking about the actual performance of the contract. The district is party to numerous service contracts, which are costly and for which various problems were noted with the contract. We mentioned earlier no competitive bids, no monitoring provisions. We'll give you a couple of examples. The district paid $8 million for substitute services, substitute teacher services, which during the 2-year period, which was during our 2-year audit period, $1.5 million of which was for administrative costs. That looks pretty high to us, and we think there needs to be a closer monitoring there. We found that the district had not solicited bids or done any cost analysis for these services since 2007. That's 4 years. We believe that's too long. At that time, the contract was projected to cost more than managing the services in-house. We always ask that before you contract out or outsource, you look to see whether the district could do it more efficiently or more effectively in-house. We'll trust your judgment on that as long as it's a transparent process and we see the cost-benefit analyses in the file. Food and custodial management services vendor, let's talk a little bit about that. The district paid $11.2 million. That includes food, supplies, equipment, and fees. It includes the food too, not just the administrative aspect of things, and $2 million on custodial services during the 2-year period that we audited. We found that there is periodic bidding of the services, but there's been no cost analyses to see if in-house capability would be more effective, and the contracts had no audit provisions. Generally, very large contracts like that should have the right for the buyer, the school district in this case, to go in and audit to make sure there's effective use of resources. That was not in there. These are not major findings, but they are something that we think should be done. We found, for example, the asbestos removal services. There was a 13-year contract, but there was no documentation of the bid process. We didn't know how they got that contract. Pharmacy benefit provider, another one that we talk about in the audit. The contract has provisions that are not in the request for proposal. Generally, what you expect to see is when there's a request for proposal put out, they bid on it, the contract should mirror the request for proposal, and that did not happen in this particular case. Talk a little bit about written contracts and contract compliance. We determined that the district did not always enter into written contracts and did not monitor some contracts for compliance. For example, there was an oral agreement with a local college for vocational technical classes. That was $1.1 million done on an oral handshake, not appropriate, and again, by state law, that needs to be in writing. The district provided accounting and payroll services to Missouri Reading Initiative Program based upon an oral contract. In that case, the district receives 8% of the disbursements as a fee. That was $146,000. You'd think that would be in a formal written contract. That was not. The district did not ensure that MSU complied with contract terms for research services entered into in 2006. These are all situations where simple, basic accounting requires that there be a written contract for that, and there be clear terms that can be monitored. Subsidization. The district subsidizes various operations of Springfield Public Schools Foundation, Missouri State Teachers Association, and the National Education Association. In this case also, we found a problem with documentation of those agreements, and we're hopeful that that will occur going forward. Talking about, for example, the SPS, the Springfield Public Schools Foundation, the district provides office space, utilities, telephone services, provided $110,000 in financial support, $12,000 in accounting services, and that may be something you all want. We don't second guess the decision to do something like that, but again, it all needs to be more carefully documented, and there needs to be a formal arrangement between the two entities. Let's talk about contract provisions. We found the district had not utilized some contract provisions to conduct audits of services provided and amounts paid, and other contracts did not contain audit provisions. So, for example, the contract with the third-party administrator of the Health Benefit Trust Fund that I spoke about earlier provides for audits, but the district has actually not audited that contract since 2005. You're talking about having paid $23 million in 2011, $21 million in 2010 in medical, prescription, and dental claims. We think this should be audited. It's just fiscal responsibility. There were also $467,000 paid in 2011 and $470,000 in 2010 just for administrative fees. Again, you want to monitor to see if those are unreasonable fees or not. We're not going to say they were unreasonable fees. We're just saying somebody should be monitoring whether they are reasonable. There was a contract with the PPO that provides for audits also, but that has not been done, and the contract is 5 years old. Again, in this particular case, payments were $18 million in 2011, $17 million in 2010. Those are large sums, and we feel that they should be audited. Our recommendations: perform and update cost analyses, periodically solicit proposals, maintain adequate documentation, include monitoring provisions, and examine the need for certain services contract, whether they should be outsourced or whether they're better done in-house. Enter into written contracts defining services and benefits, and monitor contracts for compliance. That's actually a legal requirement. And my understanding is that the university is committed to putting the school district is committed to putting those written contracts in place. Discontinue subsidizing operations and activities of other organizations, or enter into written agreements that show exactly what the nature of that subsidy is going to be, so there can be transparent dialogue about the subject. We understand that the district has agreed at least to review those policies. Conduct periodic audits of large vendors if the contract permits it. And the response was that the district would consider the need to hire somebody to do this, which would thereby increase operating expenses. My view is that audits are not an additional expense. They're a way to reduce expenses. So we're hopeful that that will be implemented. There was no firm commitment to do so. Finding number 7. Talk about fuel use and charter bus services. I'll go quickly through that. There's not a lot of money at stake here, but there were some findings here. We found that the district needs to improve controls and procedures over fuel use and charter bus services. There was not regular reconciliation of fuel use reports generated from an automated system you all have, which is good. Some people don't have that, to odometer readings. You always do reconciliation. What does the automated fuel say? What does the odometer reading say, to make sure people aren't, siphoning off the gas for their personal use. Maintenance uses 77 vehicles. The daily route sheets do not document the number of miles driven. Mileage logs were not kept for 3 out of 12 security vehicles either. We hope that would be improved. The district uses charter buses, as you know, 10 charter bus services, but has not established adequate policies and procedures to determine whether a district bus should be used or charter services needed. This is the outsourcing issue I mentioned earlier. There was over $500,000 spent during the audit period, so it's something we think should be evaluated. Our recommendations: document a periodic reconciliation of fuel purchased to amounts used, and investigate any significant discrepancies. Ensure mileage logs maintained for all district vehicles, and we understand that will be, that at least the reconciliation will occur. They're going to consider the need for mileage logs. We hope that they'll go further than considering that and actually implement it. We also recommend establishment of policies and procedures to maintain documentation that you need to outsource those services, and we understand that will be implemented. Okay, we're rolling right along. We've only got a few more to go. Finding number 8, district compensation and vehicle allowances. We found that the staff reporting directly to the superintendent, including the CFO and Director of Human Resources, do not have formal written employment contracts. The CFO was paid a base pay of $107,000 and a stipend of $12,000 and a vehicle allowance of $4,800 annually. The Human Resources Director was paid base pay of $112,000, $5,000 for the stipend, and $4,800 for the annual vehicle allowance. We were not sure why the CFO and Director of HR received stipends. It appeared to us that this was work that was already within the scope of their original contract. We were in discussions with them, and we suspect that there needs to be better documentation. They're really doing additional responsibilities over and above their normal contractual requirements before they're paid that amount. We found the district paid $2.6 million extra each year to 678 employees in 2010, 2011, and to 877 employees in 2009, 2010. Extra employment for things like coaching and that type, which is fine, but we didn't find adequate documentation of what they were doing and whether they were entitled to that additional money. So, for example, a letter of appointment for additional responsibility does not usually say the stipend amount. I think if you're going to coach a team, you pretty much know what it entails, and we feel that that amount can be put in at the time the contract is entered into, so it can be clear this is not just some extra money, that it really is payment for work beyond the original scope of the contract. Our review of 14 employee personnel records found 4 lacked adequate stipend documentation. That was just a sampling, 4 out of 14, but that's a pretty bad percentage. We found that one employee who had received over $12,000 had no letter of appointment and no issue of the stipend even being addressed at all in any contractual documentation. 3 others who had received over $50,000 had letters of appointment and employment contracts, but none of them addressed the stipends. So we think this needs to be clarified and improved. Talk a little bit about vehicle allowances. This is a common finding in audits about vehicle allowances, so I'll mention it's not a lot of money, but it's something that kind of irritates me a little because I don't really understand how these work in a lot of places, and this is definitely an example of that. The district has not documented how it determined monthly vehicle allowances. The intent is that if you use a vehicle, you should be compensated for the amount of money you spend and time you spend using that vehicle. In this particular case, we found that 9 employees receive a total of $43,200 per year as direct reimbursement mileage at 51 cents per mile. Now, if you look at that, the superintendent gets $600 a month. If you do the math, that means that person would have to be driving 1,176 miles per month to justify the stipend. Now, Springfield's a big city, but I don't think it's that big, where somebody's going to be driving around for 1,176 miles per month. It's not as bad as I saw in Pine Lawn, where the person would have had to have driven pretty much around the city the entire time that they were working in order to justify it. This is better than that, but we still think that that's a lot of money. It really looks just like a way to throw some extra money in rather than really tying it to vehicle usage. And we think when there is a stipend for vehicle usage, it should be directly tied to about how much we expect that person to drive the vehicle. In this case, I doubt the superintendent drives around over 1,000 miles a month in the city. Similar problems, we found that the deputy superintendent, associate superintendent, CFO, HR director, director of elementary education, middle school, director of high school education were compensated at a rate of 784 miles per month, again, seemingly excessive.